Today, stock market carnage, oil plummets just as we predicted, and complete denial of a bubble from leading economists. Your host is Rick Fackbinger, and this is Liberties Report.
This report is presented by Private Internet Access.
Good evening and welcome to Liberties Report Week 34, 2015. This week has seen a major meltdown in all global markets, all global stock markets, and the commodity markets. We predicted this. We talked about this since early spring, and let's examine what we said and what happened. Most importantly, we keep repeating that a government will always save itself first. And that is why this is so relevant to liberties. Not just in the country where you're living, but worldwide. First of all, let's look at oil and commodities. As the oil price had rebounded in spring this year, we observed that the oil oversupply was consistently climbing, and so there was not a market equilibrium. We predicted that the oil price was in a so-called dead cat bounce, which means it was on a false recovery. That turned out to be entirely correct, and oil is now trading at sub 40 on the WTI index, which is lower than it's been in 10 years, even lower than in 2009. When everybody was rejoicing that the crisis was over, we said the crisis is not over, and we were right. We predicted that the music would stop playing when China stopped buying US Treasury Bonds. Because what keeps the US economy afloat, and by extension the US dollar afloat, and by extension again the lavish lifestyle in the entire US, is the fact that the US dollar is a reserve currency and a default trade currency. This is kept afloat by other people essentially paying the US to print new money and stocking that money in their currency reserves. We predicted that when China stops doing this, there will be a major financial crisis. Very recently, China not only stopped buying US Treasury bonds, but in fact sold some of them. Sold 180 billion US dollars worth of them, to be precise. And China is no longer the largest holder of US Treasury bonds. That, indeed, did spark a global financial meltdown, as we predicted. So, while the underlying cause is the Chinese credit bubble, which has inflated from $9 trillion to $23 trillion, and where there's a shadow banking economy which has just gone haywire with giving what you would call subprime credit, to be generous. A symptom was that China stopped buying these US Treasury bonds. So on this Monday we had an absolute carnage across global markets. And while there's been some recovery since, this was just the first warning shot. What we can expect next is a continued fall on stock markets. And this Monday, a lot of people were in complete denial, like this is just a hiccup, and look at all this value appreciation that's happened over the year. This small decline is really nothing to worry about. That might be true, but we're currently in month 5 of a 24-month collapse scenario. These things don't play out in a flash. There's a lot of denial, there's a lot of staging, there's a lot of what happens next going on. And so oil trade in US dollars is coming to an end. The so-called petrodollar is coming to an end, and by extension, the US dollar dominance. This is going to change the geopolitical balance a lot. It's hard to predict who's ascending instead of the United States. And from a liberties perspective, you would not want to see China or Russia ascend. And quite probably not Brazil either, to be honest. You will see the stock market continue to tumble. As stock markets tumble, there will be bank insolvency. As there's bank insolvency, you'll see a housing market insolvency. The house of cards that has been built up over the past 40 years, since April 15, 1971 to be precise, is now coming down. The bubble is popping. In this environment, again, governments will always save themselves first. And your liberties will be your own responsibility. We'll take a closer look at what happens next week. In the meantime, I'm Rick Falkvinger, and this is Liberties Report. Visit our sponsor, Private Internet Access. Good night.
This report is presented by Private Internet Access.
Liberties Report is produced using exclusively free software.